Welcome everybody. This is the Saturday morning Viper Trading webinar. If you are here to learn about trading the futures markets, you're in the right place. First, we got to knock out our standard disclaimer, and we can get straight away to some charts and start looking at some trades. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. My apologies, everybody. We're getting a little bit of a late start. We had to load up some scripts, but we'll have a good session here. Today's topic is trade entries. Entries, and more entries. So without further ado, let's get over to screen one. Now, I am not connected to the data source. I'm going to try to do that right now. Hold on. First, let's do this. Let's check our charts. We loaded up the new. Let me get this cleaned up a little bit here. Here's 6B. You know what? Before we get started, I'm going to take a quick poll of the team. I see people still coming in. Don't worry, you haven't missed anything. We're just sort of getting kicked off a little bit late here today. Let's go ahead and type in the instruments that you want to see some entries on, and I'll write them down here. We can look at anything you want today. Gold, oil, currencies. Here's the list that we track right here. NASDAQ, YM, Russell, anything. Just go ahead and type it in. What do you want to see covered this morning in terms of trade entries? Currencies, 6B, 6A, dollar index, crude oil. All right, let me jot this down. Hold on, stand by. Oh, we got 6E and ES. Okay. We don't normally cover those, but we can look at those. We got RTY, 6B. Okay. YM, NASDAQ, 6J. Anything else? Anything else do you want to see covered? What instruments covered this morning for trade entries? Type it in, and we'll make sure, we'll try if we can get to, we got a request for nat gas. We don't look at that too much, but we can pull nat gas up. Anything else? I don't know, Manny. Hey, Manny, good morning. I have to, truth be told, I haven't looked at nat gas in a very long time. And there may be some trades there. So let's do this. Let's get the data source fired up and start looking at some charts. Alrighty. Well, since we have 6B teed up here, let's go ahead and start with 6B. Let's kick it off with 6B because there are some questions about currency trading. So before we get into the details of taking trade entries, let's just get all on the same page in terms of definitions of trade entries. And for today's purposes, I'm going to try to keep this as simple and straightforward as possible. I'm not going to go through 47 different ways to get into a trade. I'm going to keep it really simple, and we're just going to go through like one or two trade entry types. That way, my feeling has always been if you can keep things simple in the beginning as you're learning or as you get experience, the two basic types that I think are the most straightforward to learn are really defined by the market condition overall. So let's say if you are in a trend, it doesn't matter if it's up or down. It's just if it's a trend. Generally speaking, you are taking retracement trades. Pretty straightforward, right? If you are in a range, you are taking support and resistance trades. Right, everybody, and we're going to go over in detail how these two are different and how to trade them. Everybody try to put this into your cranium there and just bank this information. So it's really simple. If you're in a trend, you're buying and selling pullbacks, whether it's up or down, right? If you're in a range, you're buying and selling support and resistance. Pretty straightforward. Now, that's a lot easier said than done, because that means that you have to know the market condition at any given point. Now, when you look back on a chart like this, 6B for instance, we look back for a couple of days, at excuse me, at any given point, do you know what the market's doing in real time? That's the question, right? Some places it's a lot easier. Over here, for instance, let's look at a couple of areas. Here we can clearly see in this area right here that we were in an uptrend. Well, let me go back. Let me go back before we get into that real quick. Markets fluctuate between periods of consolidation, where they go more or less sideways. And the way we can tell that, of course, is we put lines at the top and we put lines at the bottom of the trading range. And then we trade accordingly. At some point, markets come out of that range and they either break up, in the case of the uptrend, or they break down in case of the downtrend. But the key is to be able to tell what the market condition is to determine what trade to take. And that's tougher than it seems. So let's go back. Let's do this. I'm going to show you some random spots in 6B in some instruments before we get into the trade entry types and actually taking trades. And we're going to see if you can spot the market condition that I'm showing. Okay? We'll see if you can actually spot it. We'll pretend we're in real time. And I'm going to pause the screen for 1 second. And we're going to do that little exercise real quick here. I'm going to show you several market conditions. And we're going to keep it really simple. It's either going to be up, down, or sideways. We're going to do a series of exercises here. And you're going to I'm going to advance the market like we're in real time together. And you're going to type in U for up, D for down, and S for sideways. And this is going to be really helpful because when you start looking at markets live on Monday morning in real time, you're going to have to know the market condition, right? Okay, here we go. I'm going to start with 6B. And I'm going to start it right here. This is going to be early on the morning on from last week, 6B. I'll just advance the chart. We'll give you about 10 seconds to watch it. And you type in up, down, or sideways when you feel you understand what the market condition is. Okay, we're at 6:26, 7 o'clock. Remember, we're typing in U for up, D for down, S for sideways. We're at 7:20. Current market condition, 7:30. 7:32. All right, I'm going to stop it right there. Good. Good. Almost everybody. Hold on. I didn't mean to show that last part. People were typing in down. Okay. I went a little too far. Sideways. Good. Sideways. Now, in all fairness to everybody, what I should have done, and this will help you to spot the sideways condition, is we would put our lines, right? We would put our lines. Here's resistance up in this area right in here, and here's our support. Everybody knows how to draw the lines. We have whole webinars dedicated to that. So here we can see 6B, for instance, was coming off of a little bit of an up move from over here. This would have been overnight. Midnight Pacific would have been here on the 29th, right in here. And the overnight session was in a little bit of an uptrend here, right? You can see background was green. Bars are blue. Everything's stair-stepping up. We see that's an uptrend. Pretty clear. Then we come over into here, and now here's the way that I like to do this. Is I like to track the swing levels, and of course you can use the predictors to help with this. They're located like that. for the simplicity's sake, I'm taking them off for just a second right here. Excuse me. So what I do is I track the major swing areas. For instance, you can see there's sort of a swing a little bit here. So how's the best way to say this? As the market advances forward in real time, I'm looking back at these swings, okay? And I'm looking here, and I'm looking here, I'm looking here. I'm watching this area right here. See these swings starting to establish themselves? You can start to put your lines on as soon as you see the swings established. You can put your lines on the chart. Gary does this in the room in real time live, right? And when you start to see that, in this case over here, in the case of the uptrend, when you had these swings here in this little consolidation patch around the midband were broken to the upside, it became clear we were in an uptrend. Now, when you cease to be in an uptrend, or a trend at all for that matter, these swings are going to be located pretty close to each other. Here, right here. Can everybody see that? You put your lines on there, and then so in the case of the uptrend, our trade entries are thrust, pullback retracement to support, buy, thrust, pullback to retracement support, buy, etc. In the case of the sideways motion, we have to determine if we're going to trade the range, and that's determined by the size. Is it 20 to 25 ticks minimum? And then the second question is, are you going to short the top and cover at the bottom? Are you going to buy the bottoms and sell the tops, take profit at the top? Or are you going to trade both sides? That's really what it comes down to. How many of you like range-bound trading like this? How many of you like to spot consolidation ranges like this and trade both sides, or trade the short side? How many? Show it. Quick show of hands. Anybody like those? How many of you like those? How many of you don't like them? How many of you do not like trading ranges like this? Quick show of hands. Do not. Oh, jeez. No. Do not like. It's like my 4-year-old granddaughter. Me no like. I don't see one. Yes, actually. Huh. Look at that. Well, now question, why is that? Why don't you like ranges? Is it because it's hard to spot these support and resistance in real time when they're happening? Is that the problem? I notice most people avoid these ranges. Which is okay. If you feel that you don't do well in range trading, well then, and I know the other thing that makes it tough, here, let me advance this a little bit more, is spikes like this, right? Where it punches through support and then spikes down like that. You're looking, in other words, if you were trading the long side of this and buying it, you're looking to buy here, this might have stopped you out. So it's kind of a pain. Roger says, I don't really like ranges, but I'm trying to learn in Sim to work with them. Claude says, I stop out too many times. Thomas says, I think the chop is dangerous. Steven said, well, this is really good feedback. Steven says, I tend to misjudge where the top and the bottom of the range is. Chris says, I usually get chopped up and stopped out. Hard entry points from Manny. Wow, you guys and gals really don't like ranges, do you? Huh. I like them because I know there's a trend coming right around the corner. Oh, that's good, Carl. Yeah, absolutely. Huh. Okay, well, let's do this exercise one more time, and then we'll get into the specifics of the trade entries and how to deal with it, right? Let's get a different instrument up. Let me look at our little list here. Let's pull Weimer up. Now let's look at some Wyme trades here real quick. Wyme is on the list of good friendies today. Let's hope we don't have any data issues to deal with. Weimer was a cranking on Friday because of all that news. See if I can get this data to load. Stand by 1 second, please. All right, here we go. Wymie is a goin'. Hold on, there's a lot of bars. Let's do this exercise one more time. She's got a lot of data to work with. Please stand by one more minute. This is going to be an interesting exercise. Tell you what, let's do a little bit differently. Let's do some trade exercises together. What I'm going to do is I'm going to advance the chart on YM. And when you think you see a trade in real time, you type in a T. We're going to start in the pre-market session. So what this is going to combine is this. Is you don't necessarily have to type in whether it's long or short. We'll circle back and talk about that. Let's just see if you can spot the trade entries themselves. Okay? I'm going to start in the pre-market session for YM. And we are going to advance this chart. Is everybody ready? Yeah, no. Here we go. YM. Now, for the purpose of this exercise, we are going to keep our eyes focused right over here on the right-hand side of the chart. Now, you can, of course, look over here at what happened, but this isn't relevant to what we're doing here, right? This is just for swing purposes to watch, the trend and the swings. But I'm going to advance the chart in real time, and you type in a T when you think you see a trade setup. Okay, we ready? And we'll circle back to discuss what they are after we do this. Ready? Starting right now. Remember, when you think you see a trade, you type in a T. All right, let me stop it right there. We're going to keep going, but I want to stop it right there. Most of you got this one right here. Now, what's happening here is this, is that, let me just back up. So we had come off of a huge sell-off in the overnight session, European session on YM. Double bottom down here. We start to go into a little bit of uptrend. That's why I was saying you look at this just for reference purposes. The actual trades are set up right in here, off to the right. Here we start to go into a little bit of an uptrend over here. This would have been about 3 a.m. Pacific on this particular morning. We start to break up. There was actually a trade right here, right? See it? Mid-band, retrace, bounce. We had the thrust, we had the retracement into the mid-band, and the bounce long. We come up, we start to go sideways. Now, this is what we talked about just a minute ago, remember? Right in here. YM started to go sideways a little bit. Now, what's actually happening here is that market's trying to determine whether it's going to go up or down. No clear direction in this area right here. So you get this sort of intermittent color of background. You get a lot of yellow bars, and you can clearly see that the market starts to go sideways. So there's no direction in here. All right, not necessarily tradable. We're looking for a break either way. So, in other words, the market forces are going to push the market down through support, possibly retrace and then come back. That would be a down break, and we'd be shorting that, yes? That did not happen. Quite the opposite happened when we poke up through the resistance area here. We come right back up to this swing. Background turns what? Green. Bars are predominantly blue, and we start to stair step up. So after a thrust in a market trend, we buy or sell the retracement. Remember, we covered that right as soon as we started talking in the webinar here. Market pulls back very nicely into support at the midband right here. And here's the trade entry right here. Now, just a quick comment on, I'm not going to spend a lot of time on this because we're sort of looking at the bigger picture of trade entry. But if you use Object Trader tool, there's various ways to get in this. When we draw a box, for those of you that come in the live room and hear the term box, I box that in. We actually have a part of the tool called the region box. And when you activate it, you can turn it on for long only, short only, or both. And most of the traders use it with a close outside the box. So in this case here, the long would have been triggered right here on the close of that bar long. Why were you looking for longs here? Anybody? Would you have activated both sides or long only? Let me blow this up a little bit more so we can talk about this. Yeah, the background's green. You have higher highs and higher lows. All indication is that this market is heading up. We're taking longs, right? Background is green, broke the support. This is quite possibly a continuation of this move over here after a short consolidation period. Now, here's why this is important. A lot of people say, well, do I have to know if it's long or short? Can't I just turn both sides of the box on and see what it does? Here's the issue here. In some cases, what will happen, and you can get trapped in this, so you need to know what to do. If for some reason the market went a little deeper, let's suppose that it came down here and actually closed below this box, but never really broke down to this level here, took this out. Let's say it just gets like a little wick or 2 bars closing down, and then it shoots right back up like this. So in fact, the trend was really up, but you got a couple of bars that dip below the midband, and you get sucked into a short that you didn't want. That's the reason that you activate the long side only in an uptrend. Excuse me. And this is the real challenge of the trade entry, is to try to spot that exact entry. We all like to see midband bounces just like this. This is a textbook midband bounce. I personally love this trade. It's my favorite go-to trade, no question about it. In fact, I would say if you could master midband trades only, you can make a very nice living doing that. Okay, I'm not saying discard the other trades. There's lots of other trades that are good, and you should take them. But this one in particular is a most excellent trade. And it's important to understand how to execute it. As I said before, in the case of the uptrend, there are cases where those bars can close down. And if you have short activated, it will get you in short in a trade you might not want to be into. And that's how a lot of traders get stopped out as a result. They take that closed bar down there. What I probably would do, and we'll look at this case, is if it starts closing below and you don't get the long, you can rebox it. You'll hear that in the room sometimes, right? Go ahead and rebox it under the midband, long only. In other words, the retracement's going a little deeper than we expected. I don't think it's dangerous on a double top. I don't see that necessarily as a double top. You're saying right in here, Roger? What I'm saying is this: is that he's saying this double top right here. Well, we would, in taking this trade, if we had taken it, we would be looking for the first target to be here and then this to break, which it did. With the box the way it is there, it seems a little way of phantom area. Yeah, in this case here, it never went deeper. But what I'm saying is if it did theoretically, hypothetically, if it went deeper, you could rebox it down in here. Now, that being said, if it took out that area right there, say we never got long, and then all of a sudden it started to break and took this area out, well, then the long might be off the table. We'd have to reassess. The reason I'm spending a lot of time in this particular trade entry is because this is one of the primary main entry types, and we've got to, if you're going to master, if you're going to start with any trade, this is a good one to start with. Midband retraces. All right, let's advance the chart. Moving on. I'm sorry if I didn't get to all your questions. Let's keep it going here, okay? I'm going to continue on with this chart, advancing it in real time, and when you think you see a trade, type in the letter T. Okay? All right, so we just took that trade there, and now we're going to advance the chart some more. Here we go. Type in a T when you see the trade. excuse me, 452. So we're still in the pre-market session on YM. Blow the chart up a little bit more so you can see it. Now we're at 509, still in the pre-market session of YM. All right, I'm going to pause it right there. Now, here, this is another trade type. Let's for simplicity purposes, let's call this mid-band retrace trade. Say that 10 times fast. Let's call that trade type number 1. Let's say that's kind of our happy place. Everybody likes the mid-band. Whenever we talk about trade entries, everybody says, I want to retrace the mid-band. Okay, that's number 1. That's the primary entry. However, if you notice here, when you go into a powerful uptrend, notice how sometimes the retracement doesn't get back to the mid-band. Right in here, for instance. How do we deal with this? There were 3 of them. There was one right there, and a lot of you got it. Dan, Claude, Bill, Ralph, Peter, Bill, Kathy, Stephen got these when the market came in and slightly breached line 6. By the way, for those of you who are visiting and new, these are the mid bands here. That is the chunky, thick middle band. Everybody knows that. That's the mid band, right? In an uptrend, you have, well, we have 1, 2, 3, 4. So the lines are as follows: 1, 2, 3, 4, 5, 6 is this line right here. This is line 6. See it? See that line right there? Line 7 would be the part of this band right here. So notice how in a powerful uptrend, when you get a thrust, the market needs to push through the prior swing, which is right here and right here. See how it takes that out? There's no question at this point we're in an uptrend. Background is green, bars are blue. And if you notice that the mid-band and all the bands are stair-stepping up like such. This looks like a set of stairs going up. This is the visual indication of how you know you're in an uptrend. So in an uptrend, we all know that our trade entry type is retracement. Now, notice here that you would have missed this entire move if you just sat back and said, well, I'm not getting in until it pulls back to the mid-band. Right? It better pull back into here. You know, if it pulls back into here, I'll take the trade. Well, you missed this entire move, this entire run up here. This thing ran from 24,200 all the way to this is 80 ticks. This is a nice trade here. The actual trade entry was right here, but maybe you didn't start looking at it until over here. Now, here's the thing: if you're nervous about shallow retracement trades, which is what this is. In other words, here's the pullback. It's a shallow retracement. So let's just pause for a second and talk about retracement types. Shallow retracement only comes shy of the midband and breaches line 6 in the case of an uptrend and the stealth line, as it did here, here, and here. Middle depth retracement would come down and pop the midband, like this trade over here. Okay? And then occasionally we will have what's called deep retracements, where the market will come just slightly or deeper below the midband, but it doesn't change the trend. The midband, Bruce, if you're looking at this, is this middle line. This thicker middle line right here is called the midband. It's the basis of a lot of our trading entry technique. The middle band, the thick line, that's called the midband. So what I'm saying is this. You don't have to be nervous about taking a shallow retracement, because in the case of this box, let me ask this question. In the case of this box right here, taking it long, are we turning longs on, shorts on, or both? That's an actual question. Longs, shorts, or both? These boxes right here. Long only, right? Long only. We're in an uptrend. We're not taking shorts here, right? We're not trading both sides of the market. And so to ease your trepidation in taking that trade because it hasn't gone deep enough, that's your hesitancy, and that's why some of you didn't type in a T when these 3 trades set up, 1, 2, 3, is you might be saying to yourself, well, Charles, what if these bars start doing this? Isn't that going to be a problem? What if the bars continue down like that? What if I start seeing something like that? Well, what's the answer to that question? Why would you be nervous and concerned about if the bars started doing that and they didn't do this? Roger, I'm right in the middle of showing something really important. I'll circle back and answer your questions. I'm not ignoring anybody. I see your questions coming in. Just hang tight, okay? I'm trying to cover some critical material on trade entries, and people need to really get this. This is like, I mean, this is right up there in the tippy top important parts of trade entries. So I'll circle back to questions. I'm not ignoring you. Getting back to this. Why are we not too concerned if the bars went below our box here? Because we're not getting short. Yeah, that's right. If it comes back to the midband, you can rebox it down there, Claude, Peter, Stephen. Yes. This is good if this happens. And we don't have to be nervous about a deeper retrace because our box is enabled long only. In other words, if a bar never closes up, we never get in. And furthermore, I would submit to you that it would be even as good or gooder, if that's a word, to get down to here where we wanted it. I don't think you have to worry about a trend change just yet. This is all hypothetical. I'm just explaining what can happen, trying to ease a little trepidation on these shallow retraces and why a lot of traders that I've seen over the years don't take these because they feel it hasn't pulled back far enough. And a lot of times you can miss huge moves. Okay, circling back, we got a lot of questions coming around, and we can pause for a second and talk about this. Let's, because it seems like it's okay. This is really important stuff. Let's get through it. The guys show the auto stealth would take those as well as your lightning. Yes, Ben. We have an automated system that would take the stealth trades. So in other words, in a stealth automated situation, and you can use this and trade it, it's very effective. In the case where it came back here and you did not draw a box, when stealth appeared here and this bar closed up, it would actually take the trade for you. That's right, Ben. We have an auto that will do that. Absolutely. Let's see. Thomas. Roger. When one looks to the left, it did not retrace to a good support level. So not sure to wait for the support level. When I gamble, shallow retracements, it goes to a lower support level. Well, that's what I just showed. Yeah. That's what these are not actual bars. I drew these in. I was doing a hypothetical that it would come deeper. And I was trying to reiterate the fact that if it never closed up and these bars continue to close down, I don't want to say we don't care. We don't care from a sense that we're not getting into a trade and we're not short, right? And I mentioned that if this scenario plays out, it's actually better for us because we're getting close to the midband where we want to really get in anyway. And we're not getting short, so we don't have to really worry about it. All we have to do is get ready to take that box off and rebox it down in here. Now, I would say this, and we'll look at this scenario. Okay, now look, if you get a retracement, and let's just set this as the bar for retracements, okay? In the case of the long, it should at least come through line 6 and stealth. I would suggest to you that this would be the minimum amount of retrace in an uptrend to go ahead and put a box and take a trade. In other words, if you only got bar 1 and bar 2, I wouldn't put a box on it here. We're not boxing it here and trying to get long. You see, it's got to at least take out line 6 and stealth. You have to have some meat on the bone to at least get back to this swing right there. That's what we're trying to say. If you never break this and it never breaches lines, in the case of the uptrend, line 6 and the stealth, then I would submit to you that we don't. This is too early. There's not enough meat on the bone in the retrace. Here is enough. Midband is obviously enough, and then down here is enough. We like to engulf at least 2 candles, Ben. Yes. Yeah. So in the case here, so for instance over here on this, some of you might say, well, why didn't I just take a bar close up on this one? See how you have that little hanging man right there? And you could do that. All right. You could do a touch. You could do a touch trade on the midband. I didn't want to get too off into too many trade entry types, but yeah, you could do bar close entry there, and you'd be long on the close of this bar off the midband. Yes. The reason I don't like to do that I at least like to engulf 2 or 3 bars at a minimum, is because there are a lot of times, and we'll look at this. Here's some cases right here, okay, where it will just kind of sit there for a while. It'll just sit there for a while, and you will get closes inside of the box. And maybe you don't really want to be in that just yet, because the market will all of a sudden go bam against you. And let's say in the case of taking short inside this box, and you enabled short only on a bar close around the midband here. See all these bars closing? Well, they would be getting you short. Well, let's suppose hypothetically, well, just decide to go there and then go down. You could get a full stop out. I don't like that. I tend to not use that. The only reason I would use that is in a fast-moving market and I just want to get in. In this case here, I like to have at least 2 bars, preferably 3. That's why I drew this box the way I did. See this one right here? I want to engulf that candle, I want to engulf this candle, and I want to engulf that candle. Now, when I get this one and it closes up, in my mind, I have clear evidence that the uptrend is going to continue. Okay, because this little micro swing, this little patch of consolidation, but near the midband, if you will, has been breached, and now I feel that I'm going to get continuation. In my view, that's a higher likelihood trade, and prone less to full stop outs when you engulf at least 2 or 3 candles. How big is your box? What size do you like to use? Okay, that's a good question. When we talk about boxes, generally, I'm going to throw out just a rule of thumb number. Maximum would be like 10 to 12 ticks. You get up much over 10 to 12 ticks, you're looking at probably a breakout trade that might fail. The tighter the consolidation, the better. Let's just use a round number here. Let's say that the bottom of the box is at 200, even, roughly, 01 possibly, and the top of the box is at 09. So here you're looking at about 8 ticks. 8, 9 ticks. In the case of these tight little boxes over here, when it breached line 6 and stealth for those long entries, 16 would be the bottom and 22 would be the top. So here you're looking at about 6 ticks. The tighter, the better. The way to think of it is this, is that the tighter the consolidation on the retracement, it's like a coiled spring getting ready to pop, right? You've just pressed that spring down, you pressed it down until it's all the way as tight as it can get, and you're waiting for what's that spring you want to do. Bam, you let go and off it goes. Think of it that way. That's what these trades are all about. We'll look at some areas here where the consolidation is not that tight, and we'll look at some trades that you wouldn't want to box and take. Can you repeat auto stealth and it would take all 3 of these trades? Yes. Yes. In the case of well, all of them. It would have taken this one. It would have taken that one. Right on this bar right here, it would have taken that one. And on that bar right there, it would have taken that one. Yes. All 4 long trades here. Auto stealth would have taken it. Roger, to put in less contracts so you can add if it goes into midband or below. Well, Roger, personally, I'm going to just spend 1 second talking about leverage. The ideal condition would be, in the case of YM, where it's a $5 a tick instrument, You can put 2 contracts on. Generally, what we like to do is put a minimum of 2 lot on. Let's take this trade right here. Or here, we can take any one of these trades. Close of the bar here. Close of the bar right here. All these closes are getting in, whether it's a stealth entry, a box. You can even use the line retracement tool here, the ray trade, lots of ways to get in it. Let's say you're just long here. Now, can you see when these trades pop to that next swing? Most cases, that's going to be somewhere between 6 to 8 to 10 ticks. What I'm saying is the close of the bar here, 33 to 43. See how that's 10 ticks? So what we like to do is we like to peel our first contract here. We call that to get the scalp off. Excuse me, hold on a second. So in the case of that long trade, you're peeling your first contract here, and then you engage a trail stop for your runner. I haven't really talked too much about following on how to manage the trade. We're focused on entries today, but that's how you would do it. So here, for instance, you'd be long on the close of this bar at 23. Scalper trade on one contract come off at 30. That's 7 ticks. See the swing here? And you trail the stop out, and it takes you out. Same here. Here, let's follow on this last trade. The scalp, you get on the close of that bar, 69. The scalpy comes off at 81. That's 12 ticks. Maybe you got out earlier, like 8 or 10 in here. And then see how it pulls back, and you get out. So this last trade, there wasn't much to that. So you had 1 long, get back in, 2 long, get back in, 3 long, get back in, 4 long. All right, let's get on to another instrument. I think we've kind of milked this as long as we can, and I don't mind spending time on this as long as we get through all your questions. Any other questions on this? How you would have managed this these trades on YM? Any questions on YM, on these trade setups? So we can move on. Any more other questions? I don't see any. Okay, good. All right, let's see. What other instruments do we have here? Do we want to look at NASDAQ? Or how many of you are not trading NASDAQ anymore? I can pull NASI up if you want, but it's kind of been in the trouble chair, and it's on the border of getting out of the room. Yeah, okay. All right, we got a handful of NASDAQ traders. Let's pull up a quick NASDAQ chart and take a look at some setups. And then we'll move on to something else. I said there was some ES traders in here too, in that gas. We'll get a few more up here. Okay, it's trying to load NASDAQ. Going to be a lot of bars to look at on NASI, I can tell you that. Going to be a lot of bars to look at. I hope it loads. Especially for Friday. It's probably 3,000 bars. Maybe more. So for those of you that are new and visiting, when we talk about NASDAQ, it's NQ. It's $5 a tick. It moves. There are a lot of algos that run against that instrument. What that means is that it moves very, very quickly, and it can be a little spiky and whippy sometimes. And if you can't spot what's going on and pull the trigger quickly, NASI can bite you pretty good and very hard and fast. Let's go in and take a look at Friday. There's going to be like 9 million bars here. Somebody said, can we look at NASI around the open at 6:30? Sure, Peter. Let's get back. Give me about a week to scroll through all these bars. No, I'm just kidding. Just give me a minute here. Man, there's a lot of bars. Holy cow. I'm still scrolling. I'm only at 9 o'clock. Yeah, opens at 6:30, so still working my way back here. Stand by. Here, let me illustrate to you what I'm doing. I've been scrolling now for almost a minute, and I'm only at 8:30. Man, that's a lot of bars. This is right about, I think, when the news came out. Let me go back. I think initially there was a huge spike down. Now, let me just put this in context and how fast this is moving, just to give you a frame of reference on how quickly NASDAQ can move. I believe the first Flynn news came out around 8:30 on Friday morning. Let me show you what's going on here. Here's 8:29. Here, let me do it this way. I think this will really illustrate my point. 8:29 starts right here. 8:29 ends right here. You see all these bars? All these bars printed in 1 minute. 8:30 starts there, and 8:30 doesn't end until right here. All these bars printed in 1 minute. Now, no human is doing that. Everybody knows that, right? That's all scripts. That's algorithms just pumping, just pumping. What happens is this, and most of you know this, is that there are news bots out there. Okay, there's news bots. The big guys, a lot of traders, big trading houses, they have algos. They have scripts, very sophisticated scripts. They spend tens of millions of dollars writing on teams that are distributed all over the world. I know that. Everybody knows that, right? The big banks, Goldman Sachs, they have teams of scripting traders that script these scripts, and they set them up, and they got news bots tied into news. And what does that mean to us as simple traders? Well, what that means is that when those things are engaged, they are rapidly firing orders, rapidly. No human could keep up with it. So it's easy to look back and say, well, look at this beautiful short. Oh my goodness, this thing was selling off, and then it retraced here, and then it came down and hung at the mid-band to get in short. I mean, this is all between here and all the way over to here was 3 minutes. I mean, if you were lucky, you could have fired a market order. Who knows where you'd be filled? Probably get filled down in here somewhere. It would be like jumping into, have you ever seen a mountain stream just hauling, just like rapid river? It would be like jumping in that. That's what that's like. I mean, you can trade it. You can try to get in the middle of that freight train and jump on it, but there's a likelihood you're going to get smacked around. Look at over here. So then what happens, as I was saying, it was almost like, then the bots turn around, the scripts, the algos turn around, and they run it right back up. Could you have caught this long trade? I don't know. How long did this box take to form right here? 10 seconds? 15 maybe? Could you have thrown up, and at the time, would you have known to go long on that retracement right there? Probably not. Maybe you had short enabled, and then blammo. Was there any real retracements to get in here? Well, you might say, well, Charles, look, here's your little line 6 and stealth breach. But all the bars from 833 started forming right here. And 833 didn't end until all the way over here. All this printed in 1 minute. Could you have gotten in these pullbacks? Probably not. Yeah, the background was red, Bill. That's what I was trying to illustrate. So when it comes to NASDAQ, I personally have started to move away from NASDAQ because of this very reason. There's just too many algos. It's tough to compete with algos. Okay, they're just too fast. Unless you're willing to forego all other instruments and not look at anything else and solely trade NASDAQ, if you want to make good money on NASI, that's almost pretty much what you got to do. Because these bars are moving so fast. I mean, just seconds. These are printed in like literally seconds, these bars are printing. And there's just no human way to get in there and do it. I mean, these pullbacks here probably lasted like, 2 seconds. These right here. They're just shotgunning. The bars are just shotgunning. Anyway, okay, enough said about that. Let's move on. Let's try to get back to the open. I'm not saying throw NASI out the window completely. There are times when you can trade it, but you have to let it settle down. I think the news came out actually over here. Might have been 8 o'clock. I'm trying to remember. I wasn't kind of really paying attention. It was after we closed the room. I know that. All right, here's 6:30. 6:30. Where are you? Here we go. All right. I think we caught this long trade in the room. I can't remember. So much happened since then, and I'm not just saying that to be facetious. I really don't remember. I know Gary opens the crude oil prior to the pit, 6 o'clock when so Gary opened the room probably somewhere right around here. Does anybody remember? Was anybody in the room? Did you take this short? Was he paying attention to this at all? I know normally you guys focus on crude the first 20 minutes, half an hour. Was the NASDAQ chart up? Was anybody in there Friday morning or remember what happened? I didn't get in there till about like 6:20, 6:25. I didn't come in until like in here. He mentioned it and he called it. Okay. All right, Ben, Ralph, thank you. Peter says Nazi is pretty good for making a quick $500 in the first half an hour. Yeah, that's true. Let's look at this scenario right here. Here's 6:30. Here's the pit open. I'm only going to spend a few minutes looking at Nazi because if you want to study and learn Nazi, I would suggest doing some real-time exercises yourself on it. And if you feel comfortable in sim, then go ahead and start with a one lot. I wouldn't start loading up and taking a lot of risk on NASDAQ right out of the gate. It's a stern taskmaster. It can make you very quick money quickly, and it can take it away just as quick. Right at the open, you had a mid-band box form very nicely here. This is one of the few exceptions of the long-short box. And I'll just say it. Right around the open in the first between here and 7 a.m. Pacific and news events. Okay? And what I'm saying is this. You might be saying, what are you talking about, Charles? Okay, let's go back. What I'm saying explicitly, to be clear about this, here's 6:30. So right at the market open at 6:30 Pacific, and here again, these bars are moving pretty quick. Here's 6:29. All these bars shotgun in a minute. And at 6:30, it came and it paused right here. At the time that this box formed, what was the trend? At the time that the open mid-box formed, right here, technically speaking, what was the trend at that time? It was down, right? Background was red, predominantly red bars, mid-band and all the bands stair-stepping down, lower lows, lower highs. We were going down. So you would have probably, here, let me put it this way. In all fairness to everyone here in the team this morning, if you had boxed this, there's a strong likelihood that you would have had short only enabled. That's what I'm trying to say, right? You're thinking down. Now, there are cases, especially with NASDAQ, where right at the open and at news events, critical news events at 7 o'clock Pacific or other times like the Fed, where you want to let the box go either way. In this particular case at the open on NASDAQ, if you had enabled short only, it never closed down and never got you in here. However, if you had enabled longs and shorts, you would have been filled long on this bar right here. Now, I'm going to advance this chart. We all know it went up. But you symbolized by putting in the letter T. Let's see if there was a spot to get in if you missed the initial box right here. I'm going to advance the chart as if we're doing it in real time. Ready? You type in a T when you think you see a trade entry. Here we go. Wait a minute, let me back it up. Blow this chart up a little bit better. There we go. Here was the initial box. Hypothetically, we didn't turn the longs on. We were thinking short at the time. We see it poke up at the open, and now we're thinking, possibly long entry. So let's see if you can find a T to get in. Here we go. I'm going to go bar by bar as if we're in real time. You're typing in a T where you think you see a trade. All right, I'm going to pause it right there. The whole premise of taking trades in trends is to take retracement trades after a thrust. In the case of an uptrend, you get a thrust like such. The background changes color, sometimes to green, sometimes to an intermittent color, and then we are looking for a retracement, which we got right in here. In the case of the long, line 6 was breached, the stealth line was breached, and we had an opportunity to draw a quick box, bar close, line trade. And the close of one of these bars right here, depending on when and where you drew the box, would have gotten you long. So yes, that was a T. That was a trade entry right there. So this is a good pattern to memorize, by the way, if you're trying to think about patterns to learn trade entries. And this happens a lot. Notice when a swing is taken out to the upside and then it pulls back, it generally is going to check that area where it broke out. Like right in here, for instance, this is a textbook retracement into support. See it? I mean, that's just textbook right there. Takes out line 6 just by a few ticks, breaks, closes the bar, breaches stealth. We looked at that trade just a few minutes ago, remember? That's the shallow retrace. And there's enough meat on the bone to get a scalpy off. That's what we're looking for. Just think of it that way, right? You're saying to yourself when you put this box or you take this trade, I want it to at least get to here. So you get in it, excuse me, 30 and a quarter, I don't know, 30.50. And you get it up to 32.50. That's 8 ticks, 9 ticks. There's your scalp. Take one off, and then now you're trailing the rest. Most of you got that. Kudos. Gold stars to everybody that typed in a T. That was the trade. Yes, that was the pullback for you to get in. Perfect. All right, let's advance this chart and see what happens next. Okay, you ready? All right, now if you pulled the trigger on that trade, here's what you got. Takes out that swing. Comes back. Okay, I'm just going to show something real quick here. Some of you are typing in T's. That's cool. Yeah, this is sort of on the late side of the shallow entry. Really, what we want to see at a minimum is, in the case of the long, is to break that line 6 and take out stealth. Sometimes it goes a little bit lower, sometimes it touches it. This is a little shallow. You could have taken that. Yeah, that would have been a trade entry. And then she just rifles on up. Now in the live room, you hear trail stop calls. And the way that works, just to sort of demystify the trail stop a little bit, is you're going to find that the levels that are being called out are going to be somewhere either between stealth and line 6 following up. That's a little tight, like this. Usually it's going to be a few ticks behind stealth. What I'm trying to say to you is this, is that if you get this initial trade here, yes, you have another trade entry here, but in actuality, it can be one long continuous trade. In other words, you could have just trailed this up, so all these pullbacks here wouldn't really matter too much to you until up in here. This would have stopped you out right in here. Yeah, that would have been pretty much the end of the trade when it comes down through there. Now, this is the thing that's alluring about NASDAQ, is the fact that this trade made you, let's see. If you got the initial entry here, you got in at 30, and you didn't stop out until, I don't know, 50.50. 20.5 times 4 is 80. 82 ticks times 5 is $410 per contract. If you put one lot on here and you rode the whole thing up from this entry anywhere in here all the way up to here, you made $400 a contract, 800 on a 2-lot. So when we talk about one and done, then in the first half an hour on NASDAQ, and I think Peter, a couple of you said this, I can make $500 in the first half an hour on NASDAQ pretty easily. This is what they're talking about. You know, if you can get in and you can master and deal with the high frequency volatility, shotgunning bars, if you can see, get in there and pull the trigger. If you get in NASDAQ and you get all beat up, then you gotta, and like, look what starts to happen over here. Technically, this is a phantom trade. Did you get in here? Maybe not. If you threw a box on it, it never closed up. I don't think you got long there. Here's a case of a deep retracement. Now, a lot of people don't like these. I understand that. I think there's a psychological what would you say? A psychological hurdle. Let's just put it that way. I think for a lot of traders, and you can agree with this or not, that when you in an uptrend, in the case of the uptrend, if you start to get much below that midband and the bars turn red, technically you are still in an uptrend. Yes. Yeah, you have not, when this level is established, until you break that, technically you should be buying this, taking some profit, buying, taking some profit, buying. These are all buys here. You're not shorting this yet. But psychologically, I think when you get below that midband, and is it fair to say that when the bars turn red, it's hard to buy this? Right? When you're above the midband and the bars are blue and yellow and everything looks pretty copacetic up here, it's pretty easy. It's easier to buy it because visually you're convinced that it's still an uptrend. Yes? Even when it's sitting right there like that? In real time on NASDAQ, sometimes it's so fast I can't get a box set in time. Well, that's the other thing, Ralph. That's what I'm trying to say is that, you know, this box printed at 6:30 at the open. Did you have time to get it? Maybe, maybe not. You could have fired a market order in here to get in. That's dangerous because you get some slippage. You don't know where you're going to get filled. And, you know, the whole trade was done by 6:34. Well, no, 6:33, 3 minutes. Yeah, you're in that trade like 3 minutes. 80 ticks in 3 minutes. So it's smoking. 631, yeah, you could have taken this. Yeah, Peter, as I was advancing this chart, many of you typed in a T right here. And I'd mentioned at the time that this is sort of the minimum amount of retracement that you want to jump in. Ideally, it would at least break stealth in line 6, like right here. All right, let's do this. Let's pop up one more chart. I know we're long in the tooth, but we didn't get started till late. So let's do one more together. I see some of you have to go. No problem. Steven taking off. Manny, any final questions on this? Did we want to see ES? If we got time for one more, what do we want to see? You want to see a currency like 6E, or you want to see ES from Friday? Any votes? Either one? 6E, ES? Okay, either one. All right. Let's go ahead and pop ES up here. So here's a good way to think of it. Let me see if I could have a good analogy for this. If you had a spectrum of, in terms of volatility and speed of bars and market movement, on the lower, I wouldn't say lowest, but pretty much lower end volatility is going to be ES. Okay, ES is 1250 a tick. It's the E-mini S&P futures contract. It doesn't move as well. Friday it did because of the news, but that's an exception. That's an exceptional situation. Generally speaking, ES does not move a lot. Okay, it's heavily institutionally traded. Here's ES right here. Very heavily institutionally traded. I mean, it has the largest amount of volume on CME is ES, even more than the bonds. Okay, so you've got a lot of big players in there, and their scripts are running, and they're trying to scalp out 1 or 2 ticks. Now, how you might say, well, how can anybody make money on 1 or 2 ticks? Well, if you do it 10,000 times, and let's say that you're your own broker, so you don't pay any commission. Oh yeah, 100 lots are very common on ES. 1,000 lots, big blocks, 5,000 clipping through, chunk. Here, let's put this in perspective, just for the heck of it. Let me pull up a volume bar so you can get an idea. I wouldn't be surprised if we see 10,000 contract bars. Hold on, let me pull a volume up here. See if I can get an indicator up. Stand by 1 second. Yeah, they get rebate fees for liquidity. In fact, some brokerage houses, most of you know this, of course, are actually compensated to provide liquidity. So it costs them almost nothing. They get paid to trade. So a tick is money in their pocket. 2 ticks is money in their pocket. And if you put 1,000 lot through, 2 ticks is 25 grand. Okay, big money flowing through here. All right, big money. Stand by. Let me get a volume bar up here, just so give you perspective. It's loading. Stand by. It didn't load. Yeah, they're not loading. Anyway, if I could load it, I would bet money that comes 6:30 on this chart right here, when these bars started to print, you would see huge 10,000 contract bars. Let's go look at the open. 6:30 would have been right in here. Right? Now, you could make the case that right around the open, when you pulled back here, was that a trade entry? Well, you might have caught it. Well, no. Here, where was that? Where was 6:30 exactly at? 6:37. All right, right here. Now, if you started right at the open, you might not have got this one right here. So everybody sees what I'm talking about here, right? This pullback right here. See how it breaches stealth and touches line 6 on the uptrend. Here, so overnight you can see, here's midnight Pacific. This is the overnight session. This is an Asian session here. Here's the European session. The entire European session from midnight Pacific to 6:30 Pacific only went from here to here. That's a total of 25 to 20, 12 ticks. Went 12 ticks from here to here. Let's say you get long on this bar right here before the open at 28.50, and you ride it up to 31.50. 3 times 4, 12 ticks. This would have been 12 ticks for you. And this trade went from about 6:30 to, I don't know, maybe 7-ish, 7:10. So you made 12 ticks in about a half an hour. You do the math. Is that right? Yeah, right? Yeah, so you got in on this one, 28.50, 28.25. You wrote it up. Well, maybe you peeled one off. Okay, yeah, I'll give you that. Maybe you peeled one off at 4 ticks. So cut everything in half, basically. Half to a third. So most other instruments, it's not unusual to get what? 20, 30, 40 plus ticks. And you get your scalper off at 8 or 10. So basically cut all that in half for ES. Your scalper is going to be 3 or 4. And if you get a net of 10, 12, 15 ticks on ES, that's a big trade. That's a good trade. Yeah, it's good. You can leverage up. Yeah, there's plenty of liquidity in here. Look, if you got the size of account where you can go ahead and trade 10 lot or 20 lot or 50 lot, by all means, leverage up. Because that'd be pretty decent money. What's 1 lot? Let's say 1 lot on this was, what do we say? Was it 12 ticks? $150 roughly? Yeah, times 10 is $1,500. Yeah, if you put 10 lot on here and ride it up, Yeah, you can make money. No question about it. It's a very different approach. The trade entries are the same, but you have to be very patient and realize that you might be sitting in a trade for an hour or more, a half an hour or more, sometimes all morning. Now let's take a look at what happened after here. Here we pull back. You never really pause at the midband, so I would submit there's really no trade there, right? And here we get into this deep retracement that I think a lot of traders struggle with. This is actually technically sort of a phantom trade here. Phantom trade is where you come up, you're in an uptrend here. We come below the midband and she comes a little deeper, but you're still in an uptrend, so you're still buying it, just like that other chart we looked at. And there are cases in phantom where phantom trade can come all the way down into here and still technically be in a long condition. Let's do one more exercise, make sure everybody's still awake here before we wrap up. Let's do on ES, let's do a little exercise together. And this one is going to be, you're going to say when you think a trend has changed. I'm going to advance ES slowly, a couple bars at a time, as if we're watching it real time. We'll pretend this is Monday morning, and we're together watching it. Hold on, I'm locked up a little bit. Give me 1 second. The screen's locking up. All right. We're going to do this. We're going to use the letter T again, but this T is going to not indicate a trade. It's going to indicate trend change. All right, so collectively as a team, we're going to look at this chart and we're going to type in a T when we feel that there is a trend change. Ready? Here we go. Start advancing the chart. We're focusing on the right-hand side, and this is ES. Here we go. Okay, we're at 7:15. $7.22. Type in when you think you see a trend change. Type in a T. $7.40. $7.45. $7.53. 8 o'clock. 8:12. 8:23. 8:35. Okay, I'm going to stop it right there. Now, it was interesting to see the reaction of the team as we did this little exercise together and see how some of you had visualized what could be happening here. Some of you typed in a T as early as right here. When these bars started forming, some of you typed in the letter T, meaning that you felt that this signified a trend change. Now, here's the thing about trend change. When we say trend change can mean several things. Let's just put it right up here so we're all clear about that, because I've done this before. I'll do it again very, very, very quickly. When we say the term trend change, it can mean a couple of things, and it's pretty straightforward. It can go from most of us think of it this way. A trend change can go from up to down, which is a what would it be? That'd be a V top, right? It can go from down to up. That would be a V bottom, yes. But also, it can go. What other things can it do? When we talk about trends, trending markets. So V top, you're going up, 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 up. Bam, they stop it. Boom, they run it right back down. They can do a bottom, up, down, 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 down. Buyer step in. Boom, they run it right back. V bottom. So it's up to down, down to up. What else can it do? Is that the only two possibilities, or is there more? Can it do other? Is there other technical trend changes that can occur? Right. Yeah, you can go from what? Up to sideways, right? Which is consolidation. You go up to sideways. That happens a lot, right? You can also go what? Down to sideways. I know we're going really long in the tooth. Don't worry, we're kind of on a roll here, and I want to keep this going for now because this is really important stuff before we wrap. Let me get the predictors off just for a second so it's a little easier to show. Now, just to be clear, there's no question. I think over here we were in an uptrend, and we talked. You could have taken a little long trade here. We all see that. It plowed right through the midband, so there was no bounce here. So technically no trade right there. No place to put a box, and you wouldn't want to do that anyway. Notice when this market breached this area, what happened to the color of the background? Right here. It went into the transitional color. Right. And we see red bars, and we see a red stealth. Now, I think visually, this is why a lot of traders and some of you here today typed in the T when you saw this happening. Now, it's not changed from up to down. However, you could make the case with this swing right here that you are now what? We have four choices. Up to down, down to up to sideways, down to sideways. As of this area right here, you are now what? Of the four choices, which one are you in right there? Right here. Up to sideways. Right, up to sideways, right? And why is that? Well, you didn't get back to here, right? In order for this trend to continue, wouldn't you have had to do something like this? At a minimum, and then blammo, off you go. Taking out this swing, right? That would be uptrend continuation, yes? But is this what happened? No. That's not what happened. Not at all. Didn't do that at all. No, we have no uptrend continuation. We didn't even get close to here. In fact, this is a visual clue that you're no longer going up. You're starting to go sideways, and quite possibly this is a lower high and a lower low. We might be going down. Evidenced by this break of this support level and the fact that these bars right here couldn't even get back to the midband. These are all breadcrumbs that we need to learn to train ourselves to look at when we visualize markets. These are price patterns and breadcrumbs that are put before us to say, hey, it kind of puts up our little spidey sense. Something's going on here. We're not going up anymore. It's looking like sideways, and it's quite possible we could break down here, right? Now, many of you typed in a T when these bars formed right here. Right in here. And I would say that is where it, from a technical point of view, yes, that is where the trend changed. See how it broke this support level? You are no longer, you're going technically sideways to what? Sideways to down, right? Sideways to down. See the red stealths coming in, all the red bars. See how we're starting to check and break support? And you broke it right here. Now, was there a trade entry here, yes or no? Yeah, Kathy. Yeah, in all fairness, I think we do our best to call these trades in real time when they're happening. Yeah, there's no question about it. We can armchair quarterback these trades on a Saturday morning when it's static and we're just looking at it. But I think we do our best in that live room to deal with live conditions and try to call the trades where we see them ahead of time in most cases. But yeah, no, you're right. In real time, it's tougher to see. No question about it. Is there a trade entry here? I'm not saying in this box. I'm just saying on this chart right now, is there a short trade entry, yes or no? Is there a short trade entry on this chart, yes or no? What do you think? Look at it. We'll give you 4 more seconds. Is there a short trade on this chart, entry on this chart, yes or no? Just simple question. 3 seconds. We're going to wrap after this. This is the last trade call. Yes. Yes, there is. It's the shallow one. Notice what happens with these bars right here. Can you see these bars forming right here? Where are they located? What is happening on this little pullback? Now remember what we said on ES, right? ES, if you're going to trade ES, take everything that we normally do and cut it in half, right? So in the case here, we don't get a big, you don't get a big, huge retrace way up here. The ES is probably not going to do that, right? ES comes right to here. We break line sit. We're in a downtrend. We've broken support, right? Background turns red. Stair step down. Red bars. Red stealth. We pull back through line 2. We break the stealth line and we roll. This is a short entry right here. Yes. This is a legitimate short on ES right here. Yeah. Yep. And then she starts to break down and turned out to be a pretty decent trade. All right, that's a wrap. Any other questions before we go? Been a long, good session today. Any other questiones? Let's get our final questions in and we're going to wrap. Peter, okay, I didn't see that. It was sent from, okay, hold on, I see your thing there. Let me write this down, Peter. So stand by 1 second, please. PWECT-ECHTER. Okay. I'll be in communication with you there, Peter. I see your comment about instruments and indicators.